Right, so I believe we're live. Let me just sort out the stream. Looks like we've got a trade lining up here pretty much straight away. So let me just get this one lined up just in case. So we're on EU. We've got a 9.5 pip stop. So let's get our position sizes ready. Share the link out quick with all the VIP group just so they're not missing anything. Bosh. Right, now let me line this one up quick just in case we get it. It's still not tagged in just yet, don't worry. We basically need a candle close beneath this level. So a wick doesn't count, we want a solid close beneath to show that it's got proper change of character intent. So we go EU, 9.5 pips, put in our balance, put in how much we want to risk, and then click calculate. With our spreads, of course. We can actually set up a sell stop order for when price goes beneath that. But I would personally just, well, for me anyway, when I'm here in front of the chart, I don't have to do that because I can just wait for that actual close to then market execute, basically. We're not seeing the same thing on GU. GU still hasn't come close to closing beneath, but on EU, we are contesting this low for a change of character. The reason I've used this low and not this low is because this is the low that caused the higher high, but then this low isn't really a low yet because it's not lower than this low. The reason it's not a low yet as well is because this high isn't higher than this high. So this is all just like internally between this wave, because right now price could easily just keep going higher like that, and then you never actually had bearish structure at all, because look at this, high 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 low, high 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 low, like that. So until this low is broken, we're still bullish. Okay, so even though that looks like, oh, this is a lower low and that's a lower high, that's bullshit, because it hasn't broken out between the last lower low and the last lower high. So this is all just internal wave structure, so don't let that confuse you. So as you can see, we only wicked beneath that low. so we haven't entered yet, and we've had an initial bounce. So this right now is basically creating a triple bottom like that, which has been accompanied with, I'd call that a double top, 1, 2 tops, 1, 2, 3 bottoms. So here's kind of the zones that are in question, and of course we don't want to sell beneath that until we get the close beneath. We've got two scenarios here. The bullish scenario, where this Asian session trend continues and London trades bullish. Then we'll trade the continuation strategy. Or we have the reversal, where this sweeps the liquidity from the Asian high and then reverses and trades lower. As you've seen before, we can trade both, and then that provides us with a nice calculated hedge no matter what happens, to give us a higher chance of probability rather than just having exposure to one side. We just got to wait for those confluences to align. So right now we've got multiple instances of support on GU, and we're within our valid time frame. The only difference is the wave structure isn't too solid because of what's happening here. So I would call this the last significant low, this the last significant high, like that. And if we're going long on GU, we want to buy from this area. If we look at the previous fib levels, it's a little bit erratic. Not really proper wave structure today. There isn't any red folder news today, so we are expecting it to be a little bit quiet. You had these at like midnight, so let's not even count them. But it's been quite impulsive. If we take this low to this high, price bounce back to what looks like the 50. Yeah, price came there, bounced off the 50, pushed higher. Next one, this low to this high, price pushed up, bounced back off the 50, pushed higher. So we've only been hitting the 50 fib level. So with that in mind, I wouldn't aim for a deep retracement like the 78.6. For this, should be more favourable targeting the 71% fib. A little bit deeper than it has done so far, I know, but it provides us with a good enough RR that we can buy it following our strategy. So I would probably, if we are looking for this to continue, I'd be looking for price to retrace down here and then push higher like that. We do also have the same logic on EU, where we've got this EMA being used multiple times. We've got what looks to be now higher high, higher low wave structure. It's just EU is testing those lows a bit more than GU is. For now, let's just set an alert on GU if that comes back down. I think this is the closest position in question at the moment. Morning CM, hope you're good. Or evening. Evening for you, I believe, right, in Hawaii? We've got two potential setups here at the moment. Either long or short, basically. Either we're going to continue higher or we're going to reverse and sweep lower. So we kind of want to set up a calculated hedge here where we have one exposure long and one exposure short over 2R each position. So if it goes up or down, we win regardless. Not sure if I want to take this straight away because of the threat of that being a sweep and then change your character. So what I might do is wait for a break of structure higher before we consider going long, to let it prove the direction first, and then we can keep trading on that trend. So I'd say this is our main idea now. 2R short. Let's line that up in preparation. What I'm going to see is I'm going to set an alert. Here's a little trading view tip. I'm going to set an alert on the close. So what that means is if it wicks like that and comes straight back down, the alert won't go off. It will only alert me once there is a close above the high. So that's what I'm going to do here. And then here I'm just going to keep watching again until we have that close beneath this level. and just set the timer off just in case I'm not paying attention. But yeah, this is what we're looking at. We're looking at if we get a change of character with a candle close beneath that level, we're going to market execute and sell for 2R to the downside. So have your positions ready for this if you're following along with the strategy. And GU alert has been hit. Oh, that was for my other, sorry, that was for my other timer down there before. Yeah, brother, it's night for me, but excited for the week. Yeah, hopefully a good week. Last week was a little bit of a retracement, but it happens, you know what I mean? It's good to understand the win rate. I think this is something that I'm trying to stress a lot more. It's hard for me to remember naturally the pain points of learning to trade. So if you guys can just give me feedback on like what it is you're struggling with at the moment, then it'll really help for me to make the right kind of videos and focus on the right kind of stuff. Because it was a long time ago for me. Psychology, it's that cliche of like, oh, it's psychology, but like it's the reason it's cliche is because that is literally knowledge that has been handed down from like from over time. So all of these like cliche sayings and idioms and stuff like that, like the reason they're cliche is because they're wisdom that has literally been handed down through generations. Obviously, when it comes to trading, not so much because it's only retail trading's only been around for like 55 something years since Forex began. But yeah, psychology is definitely the massive part. I've been focusing a lot more on emphasizing win rate recently. My win rate for the past 14 months is 38%, which means nothing. If like that could make more profit than someone's strategy that is a 99% win rate if they're only making 0.01% per win. So win rate alone doesn't have all the answers. It's the win rate and your RR combined that has the answers. So if you're struggling with losing trades as a beginner, you kind of need to understand that the amount of trades that you win and lose is not the only factor to consider. It's like saying that the goal to be a millionaire is to have $1 million, but you haven't specified the currency. So then your goal is fulfilled if you just fucking go to Zimbabwe or Indonesia because you've got $1 million, but you haven't taken every aspect of that into account. You need to say, I want £1 million or I want $1 million. So that's kind of another way to say about win rate and RR, I guess. Joe says, are we entering? Well, it's up to you, mate. It's up to you. I can't really tell you to enter. I will be entering when the candle closes beneath this level. This is the previous low. I don't care if it wicks. I want a solid candle close beneath that, and then we're going short, basically. You could set up a sell stop. So a sell limit would only be if price is below this, and then you want a pullback. That's how a sell limit works. But when we're above this, and you want an order to automatically trigger as it passes through, that's when you use a sell stop. So if you look at your different order types on MetaTrader, you'll have market execute, limit orders, and stop orders. This is the event where you would use a stop order if you want it to automatically tag in as it goes through. So it wouldn't be a limit, it would be a stop order. But me personally, I'm just going to sit and watch price, and if we have the close beneath, that's when I'm entering on market execute. Because otherwise, your sell stop would be triggered by a wick, which is not valid for me. Just like we had that wick there, that would have triggered a sell stop, but that's not valid for me. I want that close beneath. Okay. So whenever you hear people saying about a stop hunt, they're not just talking about the market makers raiding liquidity on stop losses. They're also raiding liquidity on stop orders. Because if you had a stop order there that tagged you in and then it reverses, it's wiped out all the liquidity from stop losses, and it's also wiped out the liquidity from stop orders trying to sell through it as well. So they're the two types of stop orders. You stop loss and obviously you sell stop. So yeah, I basically want a candle close beneath that level, and then we'll go market execute short to the downside. So you've got stop order on, right? No, I don't have a stop order on. I'm waiting for the candle close, and I'm going to market execute. If I ever place an order, it goes in the chat, in the signals chat, and that includes limits and whatnot. Morning, Phil. Hope you're good. Trading in Dubai today. Love it. Love to be full time. Yeah, love that, mate. It's good to be trading in a different place, especially in a hot climate or just somewhere away from home on a holiday. I hope you've got yourself in a bit of shade, no reflections, no sand. Because everyone talks about this this ideology marketing, like, oh, I just want to trade on the beach. I just want to be working somewhere from a laptop on the beach. Those guys have clearly never actually traded on the beach because it's fucking hard. You've got reflections, you've got fucking sun cream all over your hands, you've got sweat dripping down you, you can hardly see the screen, you're squinting. Get yourself in a nice cafe in a beach club by the beach in some shade, and that's what you want. Iced lattes on deck. So we also have the scenario to go long, but before we do that, we want to wait for this level to break higher and then push higher, and that scenario is true on EU as well. If this high breaks, we'll look to go higher as well, because you can see this EMA is really acting as support here. Okay, so that is another alternate scenario if price doesn't close beneath there. But if price closes beneath there, it rules out that scenario. Okay, so we're keeping our options open. We're not in the market just yet. We're waiting to see what happens. Okay, so what we're seeing here instead, we didn't break that low. Price has been supported from the EMA and we're pushing higher. So, as I said moments ago, if this high can break, that opens up the buy side scenario and we're actually looking to go long in the London session. So let's see what happens. My alert's gone off, which tell me that has happened on GU. Okay, so get rid of this alert. We've had a further break of structure higher on GU. So now we're looking to go long on GU. Here is our low in question. And wherever the high forms here, that's where we'll take the fib from. So we'll just let it develop for now. But yeah, looks like price is telling us it wants to go long. So we'll plot our levels. I already did some analysis on which fib to use earlier and I decided on using the 71. So we'll pop that there, like that. Let that develop, see what happens there. And then we'll see if EU actually breaks this high as well. So basically, we just want to let price breathe and let it develop. So I was just kind of plotting the example fib of what you would do if that was the high, but you want to just let this breathe and create its actual high. For here, this sell side scenario is still on if we have this close beneath, but you kind of just need to let the market breathe and tell you and kind of reveal its hand right now. So nothing for us to do right now. The fact that GU has broken higher hints at this breaking higher, but there's no action that we really want to take here. But notice how strong that EMA was for support. We had 1, 2, 3, 4, 5, 6, 7, 8 candles in a row on the 5 minute, so 40 minutes worth of price action tested at this level, and neither one of these 5 minute candles was able to close below and then remain below for a significant amount of time. So that shows very, very strong support at this average price. And I kind of broke it out on the last broke it down on the last Sniper Sundays videos about the significance of this and the real world significance of this and what that means. So go check that video out if you haven't already, and that should help with your understanding of why we use the EMA. But yeah, for now we just sit and wait patiently like a sniper and then wait for the right shot. Okay, so it looks like this candle is going to close higher. It hasn't just yet, but that's a pretty strong bullish candle. So sell side scenario is kind of looking ruled out now. So notice how we waited for a close, not a wick, and that is exactly why. If we entered there based on that wick, we would have got stopped out. So it's important to wait for a close when you're considering if a level's been broken or not. Otherwise, it could literally just be a raid on your stop. And same for this. We're not entering just yet. You know, we want to wait for that close before we consider a bullish scenario. And we're not entering just off this anyway, okay? Just to make that clear. We want to wait for this to make a higher high, pull back, make a lower low, and then we're trading using this EMA as a confluence to push price higher. And then with that, this will be our low. And there you go, that's the close. So we're now officially looking to go long. So seeing some very bullish action now, which is nice. Kind of prefer taking the trend continuation approach because you get a higher R per trade. So that's lovely. We can rule that out. And now we're just waiting for the higher high to present itself so we know and can predict where to buy from the lower low. Simple as that. So now we wait, basically. But Joe, tell me what's good with you, mate. If you're in the chat, you've been gone a little bit and then you've come back. How's things going with your trading journey? Likewise, Phil, let me know how it's going, what stage you're at, if you're on a demo account, if you're trading a live account, or if you got yourself a funded. Let me know where you're at, boys. Market's looking good today. We played the sweep scenario well, so we didn't get an entry, which is perfect because it would have been stopped out if we did. So shows that we've got a good level of confluences nailed down correctly. And we want to wait now for that to break, which it has done. And now we've got the bullish scenario, so we're making higher highs and higher lows with the EMA acting as perfect support, which is pretty good to see. Joe says, got my 100k funded removed from Alpha. Why was that? I believe that was when you weren't in our group, right? Tell me about that. How come they removed the funded account? So you got the account removed for 20 lots. So what's the max lot size that you can place on 100k on Alpha? Sorry. And you basically went over that. Phil says not bad always. Not bad always. I do have a funded bot, but it's not traded yet. Yeah, I believe you got set up quite recently. The funded bots, they're kind of swing trades. Well, depends what allocation you get, but kind of be comfortable with the idea that some weeks it might not trade. Sometimes it might trade fucking 5 times in a week. Kind of depends on if the market's overstretched or not with that reversal scout strategy. Good idea is different phone that I don't have out when taking. Yeah, honestly, mate, don't trade when you're drunk. Don't trade when you're under the influence. That's it's not something that everyone has to learn, but I learned that as well. Don't trade when you're not sober. Put it that way. Because when you're not sober, you're a lot more emotional, and it's just a recipe for disaster. So yeah, in my early trading days, I had that as a rule as well. Only trade when you're sober. And it kind of helps trading London session now because it's like you're never going to be drunk for London session if you're trading. So, but yeah, when I when I first started trading and I was swing trading and I was in a position where it was like you could catch a trade at any time of day with swing trading, all three sessions. So yeah, I had to be like, right, if I'm on a night out and I get an alert, I've just got to leave it and not place that trade, because you're not in your right mind to place a trade. So it's like a negative confluence. Got the fib level? Yeah. Got the EMA? Yeah. Am I drunk? Yeah. Okay, no trade. I put an 18.5 trade on and a 2 lot, so they removed my account because I went over 20 lots. Ah, rough. Yeah, they do have the max lot sizes on Alpha Capital, don't they? Something to be aware of. And they will stack positions like that together. Was that on the same pair then, or did you like have an 18.5 on EU and then like a 2 lot on GU? Or was that on the same trade? On the same pair, sorry, so they classed it as like one trade. Because what about if you have like a 20 lot on EU and then a 20 lot on GU? I would look at that as just being over leveraged and using up too much margin. But I think just because of that situation, you don't necessarily have to be over leveraged, but it's just their rule, isn't it, about you can't do over this much. Always going for gold on the champagne. Yeah, mate. Honestly, have it as a rule in your trading to not trade when you're drunk. Like I have been there, and I genuinely had that as a rule. Like, right, if I'm not sober, I ain't trading. But yeah, when you've got your part of your trading plan, and this is a big thing that takes you from being a beginner to going pro, is having your trading hours defined. So you want to have like your set office hours. So like if you've been following me for long enough, you'll know that I'm trading London between this start time and this end time, and I'm pretty rigid on that. If it comes 10 minutes before, I ain't taking it. If it comes 10 minutes after, I ain't taking it. And that really helps because you're treating it more like a profession. You've got your in and out time. And it just helps you only focus on trading for that amount of hours. And for me, it's amazing because I'm only working 3 hours a day when it comes to trading. When you don't have that, you're getting into trading to escape the 9 to 5 and you end up working at 24/7. So it kind of defeats the point. So definitely have your trading hours defined. And like I said, when I'm trading London in the morning, like I'm never going to be out drinking. So, and if I am, I'm not trading. So yeah, that really helps with it. We've got what looks to be some weakness here. So you can see this arching over. This might be providing us with the next higher low. So we want to take the fib from that low to that high in anticipation. I kind of prefer trading EU because it's lower spread. So we'll see if EU gives out. And EU has also got a very fucking strong EMA right now. GU has as well, but it's not been as... Well, it's been going on for longer in respect. It's been respected for longer. But in recent hours, EU, the EMA has been a lot more respected. Or a lot more like physically touching it over and over again. So we'll go for EU to start with. But it would be valid on both. Jack Bailey. There's a name we've not seen for a while in the chat. Good to see you, bro. Hope everything's well. I know you've been having a hectic time recently, so I hope the time's a bit more calmer now. But yeah, credit, man. I bet you've been a busy man. Try wake up 4:55, wake up 4:45, then trade till 11:30. Yeah, they're decent hours. Just make sure that you actually back test between those hours. And on your back test, note down the time of all the trades that you take in, the day of the week that the trades are, and you can maybe probably make that a little bit more concise. Because if you're starting trading like pre 5 a.m. sorry, you're going to be trading like the Asian range, like between here, and you might find that you don't get many setups between there, or just like the trades that you take that aren't profitable. So I'd get some data on your time that you're trading, and you might even be able to make that a little bit more concise and trade less. But obviously it depends what strategy you trade in and what hours it works on, because you have to understand the principles of time and price. Price action isn't the same all the way throughout the day. Different times of day, the market reacts differently and behaves differently. That's why I trade for a certain amount of hours. I've not just cherry picked and been like, right, I want to trade 9 and 12 because that works for me. I've reversed engineered what hours I trade based on when the market is good. So that is also crucial to understand. But yeah, it looks like this high is forming on EU. What we were looking for is price to bounce off one of these fibs. We'll set a position up ready. Obviously there's no limit orders just yet because we need confirmations first. But we'll get it lined up ready so we can plan our position size. So we've got a 5.3 pip stop on EU. So for now, all I'm going to do is find what lot size I need in preparation. But I'm not actually placing anything just yet, I'm just being prepared. So 5.3 pips plus your spread, which on EU is pretty minimal. Okay, so we've waited patiently for this one. What we want to see is for price to gradually slow down a bit, give us some confirmation candles here, or at least in preparation of meeting this level, and then we'll go long. So you want to see a turning point, sort of like a roundabout. Like if you're doing a 180 a roundabout, you want to see this. It's rare that price will just go bang bang and go straight like that, so there's no point just placing a limit there until you get those confirmations in the run up, because there's also the scenario that this just goes and goes straight down through it, and if we don't get them confirmations, then we don't enter. Jack says, how's it going, bro? Crazy times recently. Yeah, I imagine, mate. I imagine back to a bit of more normality now, though. That's good. That's very good. Yeah, I was disappointed to not see you over in Da Nang, but obviously, granted, things have happened. But yeah, it'd be good to see you back over there whenever you're back out. I think that's probably where we're going to base. I think next year I'm going to do it different to what I've done this year. I'm not going to just get a condo for 12 months because you kind of then like lose your locational freedom. And now I'm feeling a little bit trapped in the wet season. So I think next year after this place runs out and we move on to the next location, I'll probably just do like 3 months at a time in some place. The only thing is I like my fucking desk. I want to have my office set up, and that's the pro of having the place here. But if I'm constantly moving around every 3 months, it's just going to be a fucking ball ache with like a computer and a desk and everything. So that's the only thing that's playing on my mind. But I wouldn't probably want to be in the same place for more than 3 months. Try dodge the wet season next time. Who's your account with, Carl? I've got a few different accounts. I kind of just trade my personal account the most. You got to remember, bro. I've been trading for 8 years now, so I went through the whole stacking up funded accounts, stacking up like millions of capital, blah blah blah, trading that, and I got stung pretty badly. I don't know if you were around when it happened, but the top 3 prop firms, you had FTMO, MFF, and TFT. And basically, I stacked up a decent amount with TFT, FTMO, MFF, and MFF got shut down, and fucking TFT got shut down. So, you kind of, with funded accounts, you kind of want to not have too many eggs in one basket. And to me, even diversifying different prop firms doesn't really keep you ultimately safe from that. Because all it takes is one new law or one new regulation to come out and bang, prop firms are no longer allowed. And if you're relying on that as your source of income, you're only then one step away from being broke again. So I kind of, since then, I focused on my personal accounts a lot more, and also Darwin X, which is a different approach to prop firms. So if you look on my profile and stuff, I do have my Darwin X track record on there. It's sort of like prop firms, but more regulated. Like it's an FCA regulated approach to getting investor capital. So you basically trade on your own live account, which is a Darwin X broker account, and they then publish your track record. And investors can look at that, see all of your stats and say, okay, I'm going to give this guy some capital, he can trade it for me, and he gets a performance split. The only difference is it doesn't have all of the smoke and mirrors of prop firms. So people look at it as like, what, I'm only getting like 20% of the profit that I make with their capital. Like, what's the point? I can get on this prop firm and get fucking 400k and get up to 90% payouts. But there's all the fucking bullshit smoke and mirrors that comes with trading on prop firms as well. So that's the difference. And it's completely unregulated. With prop firms, you're trading on a demo account and they're paying you commission based on your simulated trades. Whereas with Darwin X and with trading your own personal capital, you don't have all these bullshit rules like, oh, I placed 20.5 lots, so they've removed my account. They wouldn't care. If you've made money, then you've made money. So, yeah, I kind of focus a lot more on personal capital and building up Darwin X and seeking other ways than prop firms nowadays. But I still trade prop firms, don't get me wrong. I've got a few different prop firms on the go, but I kind of have learnt my lesson from when that happened 3 years ago. And I don't want to be too overexposed with relying on them. So, yeah, personal accounts and Darwin X is good for me. But obviously I'm in a position to be able to say that because I've stacked up prop firms in the past and got crazy payouts from prop firms in the past. So I'm comfortable enough now to trade personal capital and be at that point, which is the goal for you guys, you know. you don't want to rely on just trading prop firms forever, because that's not your money. You want to stack up your own personal account and trade that however you want. Those payouts don't get denied, and they can't say, no, we're taking all your account off you. So bear that in mind when you're, because a lot of these trading gurus and these trading educators, they heavily promote prop firms because they know how persuasive it is to be able to sell the dream that prop firms give. But I would honestly say don't overexpose yourself to them, where if your prop firm got taken off you, you can't make money from there. Do you know what I mean? So diversify it a bit. I would recommend Darwin X. They are FCA regulated, whereas prop firms, they're not regulated and they're not actually giving you capital to trade with. You're trading on a simulated account. GU has broken the high, so we're not looking for that pullback anymore. Maybe that is a sign that this will break the high. Don't try and scalp that. Wait for it to pull back. But yeah, this might be a sign that this high gets taken out, and then we look for the next move. All that we would do there is simply move the fib level higher to account for that. Going back to the prop firm thing, I think I might, just for the fun of it, I might start being a bit more aggressive on prop firms. I feel like that's kind of what content people want to see. Is like, I've passed this much in prop firms, I've got this payout from prop firms. So I might just do it for the bants. Yes, Rio, I hope you're well. You get any trades on this morning, Rio? I saw the, I don't know if you saw what we were doing, but I was anticipating the Asian sweep if this low changed character and closed beneath, but because it was a wick, I didn't take it. But I know some people potentially might have tried to sell this lower and been stopped out, but I don't know. There's a lot of different ways people categorize the Asian sweep. I see a lot of people define Asia a lot differently to me as well. Like, I define it between the overlap of Tokyo and Sydney, which right now is 1 a.m. to 7 a.m. But I see a lot of people doing this and they call the Asian close like 5 a.m. Lads, 5 a.m. UK time is like fucking 11 a.m. over here. The Asian session is not... the Asians don't stop trading at 11 a.m. Otherwise they'd only work for like 2 hours a day. So it does kind of make me laugh when people call the Asian close like 5 a.m. and I'm over here in Asia and that's like fucking not even midday. So yeah, I know, like, not to disrespect other people's credibility and stuff, because I know a lot of people say, oh, Asian close 5 a.m. blah blah blah, but just think, right? Yeah, but obviously whatever works for you. Like, if you've tested that time and that works for you, but for me personally, Asia has always been the overlap of Sydney and Tokyo. Similar to how you have the overlap of London and New York, and that's a critical time zone as well. But yeah, 7 a.m. UK, that is kind of when the Asian session closes. I risk 2% on the challenges. Yeah, I think that's what I'm going to do. That's the approach that I've started taking recently when looking at it, is that funded account challenges have really changed over the past like 3 to 5 years. What they used to be is you used to have to make 10% within the first 30 days. So if it had gone 30 days and you've not made your 10%, you failed the challenge. Whereas now they're an unlimited amount of time. However, okay, they were pretty smart about this, and they removed the time limit. And then what happened was, instead of people giving themselves 30 days to pass the challenge, people just like think that they need to pass it in like 1 day or 1 week. And like when, as a trading community and space, when they removed the 30 days, everyone's like, oh my god, this is amazing, like you can trade it for however long you want. But what all that happened was, all the beginners was like, oh my god, I need to pass this as fast as possible now, because it's that sort of law. I can't remember the exact rule that they call it. Is it the Pomelo something? I don't know. I can't remember what it is, but there's a law in psychology that's like, the task will take however long the deadline is, basically. So if you give yourself a piece of work and say, I'm going to have this done by next week, it's going to take you a week to do it. Versus if you say, I'm going to have this done in an hour, it's going to take you an hour to do it. So that was the sort of thing with prop firms, is that when they originally had the 30-day limit to pass phase one, everyone gave themselves 30 days to do it. The trap of that was that you trade normally for like 3 weeks, and then in that 4th week you're like, fuck, right now I need to over leverage. But now that they've removed that, every new trader and every like beginner trader sort of wants to pass it like as soon as possible. They want to pass it in like 2 days, so they'll just over risk like from the start and do it. So it used to be 10% within 30 days, and then phase 2 was to just make 5% within 60 days. And the trap of that used to be that, oh well, I've just made 10% in 30 days. I only need to make 5% now, and I've got 60 days, so I'm just gonna like rush it, and it would sort of make you a little bit cocky, because you'd think, oh well, phase 2 is going to be a piece of piss, I've just made double in half the time. And that is where it would really test your professionalism to keep trading according to your strategy and not rush it or not get carried away or not trade differently. And that's kind of what tripped a lot of people up. But again, now they've removed those time limits, and it's even worse for people. Logically, it's not. Logically, it's a lot easier than it used to be, because you've got unlimited time, but it's the psychological effect of not having a deadline that makes people rush them. But yeah, to be honest, the way that I look at prop firms is, it's not real capital. It's not it's just simulated capital, and they're a very sensitive industry. If you've been around for long enough, you'll know that, and you'll know what's happened, even with, you know, prop firms like FTMO, that you might think, oh, that's a solid company, it'll never get shut down. Definitely don't have that mindset where you would basically put your life savings into FTMO accounts. Like, definitely do not do that. No matter how good of a reputation they have, they can get shut down. We've seen it before with MFF and TFT, so don't do that. But that being said, yeah, I think I'm going to start being a bit more aggressive on prop firms, just because that's what people want to see, okay? And I'll kind of show you how to do it the right way. So yeah, with every prop firm account that you buy, you kind of have to over leverage and over risk in order to pass it. And with that, you kind of have to let go of this idea that if I'm a good trader, I'll buy a prop firm and I'll pass it, because that's not true. They put you in that position where you have to over risk in order to pass it. So Joe, when you're saying I'm risking 2% on challenges, you're not, mate. You're risking 20%, because you can only lose 10% of that balance. So realistically, you're not risking 2%, you're risking 20%. Because they're asking you to make 100%. they're saying you can only lose 10%, but you've got to make 10%. Well, therefore, they're giving you a demo account and saying make 100% return with what you can lose. But it's the balance and the margin smoke and mirrors that trip everyone up. A 200k account with 100 leverage that you can only lose 10% of is basically just a 20k account with 1 to 1,000 leverage. That's how it actually works on a demo account. So there's a lot behind the curtain that you kind of have to peel back and understand in order to get the best out of them. So yeah, risk 20% on that account, because you kind of need to over risk if they're asking you to make 100%, you know. But then with that, don't be too disheartened if you don't pass the challenge. Approach it in a way where you say, okay, I'm going to buy 5 challenges in this string of passing. And even if I just pass 2 of them out of the 5, I've still got 400k worth of funding at the end of it. But obviously, give yourself a budget which accounts for the challenges that you fail as well. Don't just buy a 200k account with your full budget and hope that you pass it. It would be better to buy a few 50k's with that same budget. Pass some of them, fail some of them. You've still got funding at the end of it, because it's a game of chance when it comes to passing prop firms. And that's kind of what these gurus online won't show you, is they won't show you all the failed accounts, you know. The guy might have bought fucking 5 200k accounts, blew 4 of them, passed 1 of them, and he's only showing you the certificate for the success. So just bear that in mind about the trading industry as well. Which is why I don't really see it as like as good of a thing as other people do. But I know that's kind of what people want to see. So I'll play that. I'm going to start playing that side of the industry a bit more, but be a lot more honest about it, so that it's a bit more educational and showing other people how to do the same. But yeah, in terms of the charts going on here, nothing has really developed lower. We're only developing higher, which I guess is good confluence for us, but at the same time, it's not giving us entries. So we're just waiting. Do I have any thought on trading the Asian session? Thought about it before, kind of don't want to, kind of don't need to. I've got the London session that works perfectly for me. If I was to start trading the Asian session, it just means that I'm trading more hours of the day, and it's removing my freedom. So I'd rather just stick to my time zone in the London. And being based over in Asia, trading in London is really nice for me, because I only really trade like the first few hours of London, so it means that I get the whole morning off trading, and I can start trading like afternoon, like 3 p.m. onwards, which is pretty cool for me. I'm not a morning person. I'm more energetic and focused after the afternoon. So that is something that I didn't like about being in the UK and trading in London, is that you'd have to be like, wake up early, switched on straight away, and then you're at work when you're not as foggy and focused. And that is just how people differ. Obviously, some people are more naturally focused in the morning and then groggy in the evening, and then some people are more naturally groggy in the morning and then focused as time gets on in the day. I'm the latter, so I prefer being in Asia, trading in London. So yeah, I wouldn't want to be in Asia, trade in Asia either. But I've looked at the Asian session before with some of my strategies, and I can see that they would work. I've just not put in the effort to really define the time and the pairs that it would be best at, because I don't want to be the one trading it. I'm happy to just trade London. That's more than enough for me. 3 hours a day on the charts. A routine regiment time in my trading plan when I'm trading, in a time that works perfectly for me around my schedule. So I'm happy. But what I would advise you to do, if you are interested in it yourself, is make a backtest report. What day it is, what time the trade was, did it win, did it lose, the net result, stuff like that. And then you can really pinpoint the times that work best for the strategy, and then just gather that data over time and really narrow it down. That's what I did to make my strategies, and that's what I recommend you doing when you're forming your trading plan as well. When it comes to passing the challenge, why not be conservative and gradually build it up if there's no time limit? Like if you have a consistent edge, why wouldn't you be able to pass? Because the challenge is only a demo account. So if you've got to make what is essentially 100% returns, because they're saying you can only lose 10%, but we want you to make 10%. You're wasting all of those profitable trades on a demo account. It's much better to just get it passed quickly and then get on that live stage so that those profitable trades from the edge you can actually get paid for. Otherwise, you're just paying them to trade on a demo account. So it is a much better approach to get on the live stage faster, sacrificing that you may fail some challenges, you may not, but then those trades which you're speaking of, instead of those being built up on a demo account, you're actually building them up on your live stage account that you can get paid for. So the question is, would you rather make a profit on a 50k live account, or would you rather make profit on a 200k challenge phase? Debating moving my fib. We're still bouncing off the 71. It just looks like the 71 is going to align with that low a little bit better with the EMA, but that is the actual low. This is just like a fractal. See what happens with this one. EU looks like it's going to keep pushing higher. I do want the trade on EU, but it's not playing ball. So hopefully that's the high on EU there. Then what we have to decide is where are we taking the fib from. I don't know why that alert's still on, get rid of that. But yeah, basically this is our zone. We want to have a level where the EMA coincides a little bit more with the fib, but it's not to say that the price won't break beneath the EMA. You can see there it has done quite significantly before, so even if we still target the 71, we're not wrong in doing so. This is something good to look at. So on the 2 minute, we also have the EMA being respected. And you might look at that and think to take a trade from here, higher. Which, if you want to do that, you can really do that. But for me, when we have the 5 minute present as well, I will also always choose the 5 minute over the 2 minute. Because ultimately, the higher the time frame, the higher the conviction. So the 5 minute being respected overpowers the fact that the 2 minute is being respected. Okay, just checking. Price has not really developed higher or low enough. So again, we're just waiting. This is part of trading, guys. It's not like being a machine gun and constantly trading and constantly executing. It's more like being a sniper rifle and just waiting patiently till you get the shot. So yeah, that's all that we're really doing right now is waiting for the market to come to us and not trying to chase the market. It's important that you're the one that's in control. If you're looking at all of this development over the past couple hours and you can't control yourself and you start executing, trying to sell that lower, that's just not trading. So yeah, you want to make sure you're the one in the driver's seat, because either you're trading the markets or the markets are trading you, basically. So if the markets are trading you, you're going to be putting money into them. You can only get money out of them if you're the one that's actually in the driver's seat. Okay, so price has developed a little bit further. Alert's just gone off. We've got the retracement of this wave lower. What we're looking for now is some rejection candlesticks as we approach this area. So we want to see hammer candles, dojis, tweezer bottoms, pin bars, that sort of buyer-seller exchange, which shows us that people that are short here are closing their orders, and short orders are converting into long orders, basically. So similar to a roundabout, you want to see price come down and do this. Okay, it won't look like that on the chart, but that's just what you have to imagine in your head is happening, is that the speed is slowing down, decelerating, and then starts to accelerate in the other way. Okay, so prices came down to our level, but we've not had any confirmation candles, which means that we're not looking to enter just yet. So we're not blindly just buying at that level. The final confirmation or final confluence is if we get those confirmation candles. So we could enter off the 78.6 here with it coming down that low. If we get the confirmations from the 71, then we could look to enter off the 78.6. So I might line this up. This is looking like a 4.7 pip stop, like that. So I'm just going to calculate my position size for now, but not place anything just yet. So we just want to wait for this candle to close. Don't let the tick candle trick you too much, so ignore how this looks now because it's not closed, so it's irrelevant. Don't let that play on your mind until it's closed. Okay, so we've got 1 minute left for this 5-minute candle to close. It does look like it's going to be a confirmation candle, and then we'll have our limit valid here to trade higher. So I am preparing for this, it's just not a limit just yet. So there you go. That's what we're looking for. We just want to wait for this candle to close before we call that and actually place the limit. But right now that's kind of a nice hammer candle, pin bar candle, whatever you want to call it. There we go. Okay, so limit is valid. Let's place our limits at the 78.6. Place my limits right now. Bosh, bosh. And then we'll see if we can get tagged in. Bosh. Alright, send this one out. There's the trade. EURUSD long idea. Entry SL TP. RR is 3.45. And we've got TP, stop loss, entry, stop loss, TP, and RR is 3.45. Wash. Send that out to the VIP. It's the first trade of the week, so we'll also send it out to the free group. Like so. And there we go. Now we're just waiting on this to tag in to our limit order. So limits are set. Just waiting for that to tag in. Joe says, what's the stop loss on this? It's on the screen. It's on the VIP group. If you mean in terms of working out the amount of pips, I kind of don't want to just like baby you into telling you the size, but there it is, 4.7 pips. But what you should be able to do as a trader is work out the size in pips. If you use the buy sell plot on your own chart, you get it there. But if you do want help with calculating pips, go through the free course that we've got. If you go to the Minada FX website, you'll be able to see the free course on there, completely free, and that'll go through everything in terms of candlesticks, support resistance, trends, directions, what are pips, how to calculate them, stuff like that. And then we've also got a free lot size calculator on our website, so you don't have to pay for it, you don't have to wait for an advert before you can use it. You go on the lot size calculator, put your balance in, put your risk in, put your pair in, and then put the stop loss size in, and then it'll tell you what lot size you need after you click calculate. So yeah, I hope that helps. But yeah, it's just a case of subtracting the entry from the stop loss, and then knowing that it's the second decimal from the end that's the pip, and then the last decimal is the tick. So that's 47 ticks, which is 4.7 pips, just like that. But yeah, now we're preparing for an entry. Let's have that on there, and set that level up there. That's a potential level to get out for less profit, but to be safer, should I say. 3.15 risk to reward. If you get out there, you can use it as a TP1 or a break even, or even just taking full TP if you want to. But yeah, I'm trying to get everyone up to a good level where you're thinking for yourself and you're learning to trade for yourself. And I'm seeing a lot of success with that, because when I went away for 3 weeks and didn't live trade as much, I'm seeing the group pop in. Yeah, this is my trade, this is my trade, this is my trade. And I'm saying, mate, I got the same one. You got the same trade as me, without me showing you. And that's kind of the level you want to be at. You don't really want to rely on someone else's analysis forever. The point is to learn for yourself. You never know, mate. I might fucking die in a motorbike accident. Some shit. Then what you gonna do? Not to touch wood. But you know what I mean. But yeah, this one's valid. We'll let it breathe for like another hour. If it doesn't tag in for another hour, we'll take it off and call it a day. But this is what I am looking at here. I think I will probably be more conservative with this and take full there, rather than the previous high. Okay, so we're very, very close to tapping in right here. Pretty impressive how I've called where it would actually tap in. There you go, bang, tapped in. So we're now in the live position. We're going long on EU. Let me just check that the orders have came through okay on my accounts. Yeah, cool. Next one. Next one. Let's send this out to the group that we're tagged in. You can actually still get a better position right now if you aren't in yet. Let's see. Tagged in. Lagging a bit. Excuse me if I'm being slow. There we go, tagged in. It's because I didn't pause the stream. There we go, so we tagged in. Now we wait. Now we wait. So if we have a look on the 10-minute time frame, you can see this 50 EMA is also being respected. The 50 EMA on the 10-minute time frame is basically the 100 EMA on the 5-minute time frame. So what I'm going to show you there is, you might be thinking, why on earth would you use the 10-minute time frame? No one uses that. Well, it's just to show this line on the 5-minute, but because we're just sitting and watching now, we can just look at the 100 EMA on this time frame while we're still looking at price action on the 5-minute. So let's see how this develops. Again, this strategy has about a 38% win rate based on the past 14 months. So it's more likely to hit stop loss than it is to hit the take profit. But the essence is that obviously the amount that you make when it hits the take profit minus the amount that you lose when it hits stop loss gives you an edge on the markets. So if you're struggling with your trading psychology in terms of holding trades, worried that it's going to hit stop loss, this strategy is kind of perfect for you, because as long as you look at the data yourself and you have that trust in the data, you really don't care when it hits stop loss, because it was always more likely to anyway. But you see that the wins massively outweigh that, and you become sound with the logic of the strategy. Okay, so that's how my trading strategy works. Let's see if this one hits TP or stop loss. Okay, so we've been approaching this low for the past 10 minutes, looking like it might stop out, but it's not the end of the world. Like we said with this strategy, it's only 38% win rate, call it 40%. If you take 10 trades, 4 of them are going to win, 6 of them are going to lose. So you are more likely to lose per trade, but obviously the amount that you make when you win covers more than the amount you lose when you lose. But yeah, looking like a stop out. We'll have to see. Too early to call it, but I'm accepting that this one might be a stop loss today. Got about 20 minutes left of my trading session, so hopefully it just gets it over and done with rather than edging us. But yeah, don't let it affect you. If you take a stop loss, it's just part of trading. Yeah, there you go, stop loss hit. Let's call that out. Stop loss hit -1%. But yeah, you should only be risking a small amount of your capital at any one time, so that no stop losses having a catastrophic outcome. SL hit -1%. Get that on the record, and then we move on. With that being hit, it's unlikely that we'll get another trade within this session, because if that level's been hit, it means that we're gonna, highly likely that we're gonna now change direction lower, and then move forward for the rest of London. So, with that being said, that's going to be my live session finish for the day. Let me just post this one out to the group. Like I said, I'm completely transparent. I can show you all my wins, all my losses, all my break-evens, because I know my strategy works. So you're not getting a cherry-picked approach of like, here's all my wins. You're getting, here's all my trades. And this is how real trading is done. So notice that I'm not crying. I've not lost the house. I've not lost the kids. I've just took a stop loss. And it's as simple as that. They happen. They're a natural part of trading. So yeah. This was a valid setup. If it came again 100 times, I'd take it each time. It was very valid. Everything was there lined up. We had the EMA, we had the higher high, higher low structure. We've got the fib levels. We've got confirmation candles. Pretty much everything. You've even got some extra confluence like a fucking fair value gap in the middle there if you use them. So yeah, it's just goes to show that trading is not like if you've done everything right, the trade's going to win. It's a wagered probability outcome. So I hope that's helpful. Appreciate you guys that tune in, and I'll see you next time.